Hello, everyone. Benjamin at Catholic Financial Life, and today we are talking about layered term life insurance, what it is, and when it's ever appropriate, if ever, for you. So let's just dive right into it here. Typically, for term, you're using term life insurance for a specific need. Typically, we see parents who have dependents, they have a mortgage, they have credit card debt, they have a specific need for the insurance if something were to happen to them, God forbid. So in this example, let's just say we're working with a 30-year-old man, doesn't smoke. All right, so non-smoker, has a couple kids. Health is pretty standard. All right, so standard rates here. And let's say this 30-year-old man is looking for a 30-year term to cover him for 30 years at $300,000 for today anyway. So he needs that coverage at least for a while. And we're going to look at what that typically looks like for rates. So on the right here, you can see a straight 30-year term is typically going to be, I shouldn't say typically, the numbers are going to depend on quite a bit. Health, age, of course, but in this case, 30. So let's just say it's $567 per year, which comes out to be $47.25 a month. And you can see that this husband has $300,000 all 30 years. All right. So the cost again, $567 a year for the straight 30-year term. Now, what is layered term and when is it appropriate to look at? Layered term is appropriate if you're looking at getting a declining coverage because in 20 or 30 years, you're not going to need the same amount of coverage. Your kids move out of the house, they have jobs, you pay down your mortgage, you pay off your credit cards, you no longer need to cover a college savings account in case something were to happen to you. So you have a declining, the need is declining as these debts and obligations go down. Okay? So what a layered term is, you're going to have still a 30-year period for this, again, man who's 30-year-old, smoker, all that stuff that we talked about before. Okay, standard rates. Instead of just doing a 30-year term, what we're going to do with this layered term option, all right, we'll put this over to the side, layered, is what we're going to do is we're going to do a 10-year, and then we're going to do a 20-year, and then we're still going to have that 30-year down below. And what it's going to look like is you're going to have, for the first 10 years, you're going to have $300,000 in coverage, just like before. And then after the first 10 years, let's say it's going to go down to $150,000 because the need declines. And then for the last 10 years, he's going to be covered for $50,000. The kids are out of the house, they've paid off most of their debt, doesn't really need a whole lot. Okay? So again, this only makes sense if the need is going down. We're talking about obligations, debts, dependents, which is, to be honest, most term. That's why people tend to get term the most. But what does this look like in reality? So again, here is the straight 30-year term at $300,000. On the left is going to be, move this out of the way, is going to be the layered term. So you can see right away, even though you have the same coverage for the first 10 years, on the left, the layered term is $383. On the right, it's $567. Now, when we look at after 30 years, the layered term is about $8,285 right here at the bottom in total. Whereas the straight 30-year term for $300,000 is $17,010. All right. So the straight 30-year term in this example, of course, your numbers are going to look different. $17,010 In the layered option, it's about 8,285. The difference, let's take a look here. I got to pull up my calculator on the side here. The difference is about 8,725 in this example. Your numbers are going to be different, but in this example, and that's money that you could put into savings, you can invest it into the market, whatever it might be. So if this sounds interesting to you, if you are looking at term to cover debt and dependents, these numbers can be changed around any which way you want. It doesn't have to be 300,000, doesn't have to decline as quickly as our example, but there are savings to be had if a layered term is right for you. So on the right here, or on this page, you'll find a form. Just get in touch with me. I can give you a quote and see what or if this might make sense for you, and answer any questions you might have. Again, it's Benjamin at Catholic Financial Life, and hope to speak with you soon. Thanks.